I'm Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. So did you make money in real estate this past month? Well, let's find out. If you owned a home in the Las Vegas area, you did. This is the monthly market update for March of 2024 for the Las Vegas Valley Resale Single Family Residential. Every month I produce this video. There's a companion video which comes out approximately 1 week later every month, and that is for condos and townhomes, the market update on those. So with these market updates, I try to give you a lot of information to help you, whether you're a buyer, a seller, an investor, to understand what's actually going on in the market so that you're empowered to make better decisions because you are using better information. I record these videos on the 7th or with data from the 7th of every month. We look backwards in time, of course, because we're relying on actual data. So this video recorded with data from March 7th. That means that we're actually looking at February of 2024, and of course we make annual and month-over-month comparisons, and so that annual comparison is back to February of 2023, and the month-over-month is back to January of 2024. And remember one other thing as well. In these videos, in these market update videos, I segregate out all of those new construction properties that have somehow made it into the MLS but are being sold by a developer. They are a different category of product. They do not cohere statistically, rather they create noise and actually lead to inaccurate understandings of what's taking place in the resale market. So with that said, let's go ahead and dive right into the numbers. And again, I am Justin Miller with the Chong Miller Group. Please smash the like button, share these videos with your friends, your neighbors, your colleagues, family members who you think might benefit from this information. Feel free to reach out and feel free to leave comments. Thank you. Okay, what happened in single family resale in the month of February 2024 here in the Las Vegas Valley? A lot of really good stuff, actually. There's only one real challenge in the marketplace, and we'll talk about that in a couple minutes when we get to that piece of data. But the first thing I always look at is price. So how's price looking? We ended February 2024 at $453,000 for the median single-family resale house here in the Las Vegas Valley. Now that is up, it's up 3.7% from the 437 that we had ended January of 2024. Now that's a really strong gain, right? And if we annualized a 3.7% gain, we'd be looking at more than 40% per year in price appreciation. You can look back at my 2024 market forecast that I did last November 2023, and you can see my annual prediction for the Las Vegas Valley for price appreciation for single family resale housing up 20%. But that's for the year. We're running at twice that in the month of February. So we already have strong price appreciation materializing in the market in early 2024. Now we are up from 415,000 12 months ago, February of 2023. That means we are up 9.2% over the past 12 months. How does that compare to sort of normal 12-month price appreciation? We're usually looking in real estate generally at about 4% growth rate in prices per year. In the Las Vegas Valley, in sort of the 5 to 7% price appreciation is pretty normal on an annual basis. Over the past 12 months, we're up 9.2%. So pricing is really strong. And remember, these are sold prices. These are not list prices that I'm giving you. This is what's actually transacting in the market. We're up 9.2% over the prior 12 months. And during that prior 12 months, we've been at high interest rates the entire time. This is why I've been suggesting there is a lot of latent demand just below the surface that's not apparent to most of the people who are looking at the data about this market and maybe not apparent to a lot of you who are viewing these videos, but that demand is actually there. It's right below the surface. And so once we see interest rates start to come down, we're going to see significant expressions of that demand. But we'll get to demand here in just a minute. Let me give you one other piece of price information, and that is price per foot. Because price per foot helps to uncover some of the internal market dynamics that we're seeing. So it's not just that we're looking at one number. We can actually see something that tells us more about what's happening inside the market. Price per foot last month up 1.2% at $249, up from $246 per foot. Now remember, price per foot is not a good way to think about how to transact on a particular piece of property, but it gives us some insight into the mix of properties that are actually selling and how pricing varies across that mix. Why? Because more larger properties, fancier finishes, greater appliances, more windows, all of those things cause price per foot to go higher on a particular property than if you were looking at a small house on a small lot with no windows. Right, that house is going to be less expensive to build, it's going to be less desirable, it's going to have less cost per foot to build it or to transact it. So if we see price per foot going up more quickly than the median, that's telling us something is happening at that upper half of the market. If we see it's going up less quickly than the median sale price, we know then that something is happening more dynamically at the lower end of the market, the lower half, relative to the upper half. So we were up 3.7% on the median sale price, but we were up only 1.2% on price per foot. That suggests we're seeing some resistance on the upper half of the market, right? The upper half is still the upper half, but those properties tend to be moving more slowly or with higher discounts or simply being priced a little bit more competitively to try to get those sales on those properties. Same thing on the annual price per foot. We were up 7.3% from 232 to 249. That is relative to up 9.2% on the median sale price. So that tells us actually over the past 12 months, the upper end of the market has been struggling relative to the lower end of the market. Now, this is particularly interesting because a lot of people suggest, well, the more well-to-do are more insulated from high interest rates. That those people in the in sort of the median and below for income, for housing opportunity, etc., that they're being more impacted by these high interest rates. Well, at least here in the Las Vegas Valley, over the past 12 months, and again this past month itself, that has not been the case. We've actually seen slowing of transactions on the upper end of the market. We've seen good stability on transactions on the lower end of the market, and maybe picking up numbers of transactions that otherwise would seem as though they would have been priced out of the market. So the mix right now is upper half of the market a little challenged, lower half of the market is actually doing well, at least with regard to pricing. Now, if we see that taking place, that pricing taking place across a market that's growing in terms of number of transactions, then we know that same thing is materializing in number of transactions. And so let's turn our attention to that now. And that is measures of demand. And we measure demand by number of sales transactions that concluded and the number of sales transactions that are pending. They went into contract, they went into escrow, but have not yet closed. And let me just explain for a second, as I do frequently, I use sales measures, closed measures, as well as sales pending measures to look at demand, because we know that no contract closes, no contract goes into existence without a buyer coming in and saying, I want to buy that. So it's a measure of demand. Now, it's also contingent on supply, but we have more direct supply measures. So sales and pending contracts tell us exactly what's going on the demand side of the market. So let's go ahead and look at demand. Number of closed transactions in the Las Vegas Valley for resale single family homes. In February of 2024, 1,662. That is up a very strong 26.1% from January's 1,316. It's also, interestingly, it's up 9.3% from last February 2003, 1,521. So this is a really solid bounce off of where we were in January. Now, it is true we normally expect to see a bounce for purely seasonal reasons, right? January tends to be the lowest number of sold closed transactions that we see every year, but 26.1%, or 26.3%, that's a really big bounce, right? That's an increase in the number of transactions by over a quarter. This is a good bounce, but I will point out the overall number of transactions is actually historically still low. Last year, we had gotten to the slowest overall 12-month volume that we had seen since 2007. So last year was incredibly slow in terms of total overall closed transactions. We're still slow, even though we've come up by 26.3% from what we had last month and up by 9.3% from where we were 1 year ago. So still quite low, but we want to pay attention to this because this is actual demand that's come into the market, and this is coming in and closing these transactions while mortgage interest rates during the entire month of February were over 7% on average, right? So we've actually seen interest rates backing up almost every single week of 2024 so far. We did see a slight dip, but we never went below 7.0% on the national average for interest rates, according to the Mortgage Bankers Association. So interest rates remain very elevated relative to what they've been over the past 25 years. And so even with these elevated interest rates, we're getting contracts coming into existence and closing. So what about the other side of that? What about pending contracts? Buyer shows up, negotiates a deal with a seller, contract is executed, and product goes into escrow awaiting closing. 1,992 pending contracts were written in the month of February. That is up 14.7% from the 1,737 that we saw written in January. So healthy increase. Again, we do expect that seasonally. We are up 4.8% from the contracts that were written in February of 2023 when they were 1,900. Interestingly, we're 100 contracts above where we were, pending contracts above where we were in 92 contracts in February of 2023, even though interest rates are literally higher now than they were in February of 2023. So contracts are certainly being written. Now, this gain we saw month over month, sort of typical of normal seasonal pattern. Are we going to see a normal seasonal pattern with regard to demand this year? We kind of saw that in January with an increase. We kind of saw that now in February. So 2 months where demand is coming back into this market in the way that we expect to be seasonally appropriate. Still from low numbers, still not large numbers right now, but increases that are seasonally appropriate. Does that suggest something about how this year is going to actually unfold across the real estate market? Well, let's get to that in just a minute. I want to highlight one other issue first, and a specific type of closed category. And that is, for those of you thinking about waiting for a foreclosure and getting an amazing deal on a foreclosure, in February, there were 12 closed foreclosure sales. It's down 25% from the 16 there had been in January of 2024, and that 16 was actually the highest number of foreclosure sales that we'd seen in the Las Vegas Valley for a few years. So were you one of the people who snapped up one of those 12 foreclosures? I would bet my bottom dollar none of you actually are. There's not enough foreclosure product in this market to be having any impact in this market. It's not pulling prices down. Clearly, prices are up a very healthy 3.7% month over month, and an above normal trend 9.2% year over year. There's very little foreclosure activity. Those of you who are still watching other people's videos talking about you're going to get all these foreclosures, you're going to get amazing deals, the market's collapsing. Come on, it's very clear that none of that is happening. Okay, so we've got pending going up seasonally appropriately. We've got closed going up seasonally appropriately. That's on the demand side. We have a supply side to the market. And the supply side has been acting as a significant constraint on number of transactions over the past couple of years, as well as have high interest rates. So high interest rates negatively impact demand because they force some people out of the market. It turns out high interest rates also negatively impact supply because some people who would otherwise be willing to sell their home have decided they're not willing to sell because either they're afraid that people will not be able to pay the price they want, or they're afraid they're going to have to substitute their existing home with a much higher interest rate on a new home when they move. Both legitimate concerns. Unfortunately, it means that people feel locked in to their existing houses. They may not really be locked in, but there's a psychological perception that if I trade my 3% interest rate mortgage on my current home for a 7% interest rate mortgage on another home, I'm not going to be able to buy as much house and I'm going to be paying as much or more. It's a legitimate concern. And the Federal Reserve's interest rate policies have been causing this concern. They've been exacerbating a supply problem that we started to see materialize in the second half of 2020 as we were coming out of the pandemic lockdown. This is not getting better, folks. For sale houses in the Las Vegas Valley, single family resale, February 2024, 3,486. This is down 10.1% from the 3,877 that we saw listed for sale in January of 2024. Typically, we see the lowest inventory as well as the lowest newly listed, which we'll get to in a second, lowest inventory in December of every year. We've been coming down. We came down in January. We came down again, double digits, right? 10.1% in February. There are very few houses for sale. This is a third of what's normal inventory. Literally, this is 1/3 of normal inventory. We're looking at basically 2 months worth of inventory. A normal market is 6 months worth of inventory. So even measured that way, we're sitting at a third. Measured numerically in terms of number of houses, we're sitting at a third of market. We're down 43.9% from where we were in February of 2023, 6,214, which was almost 2/3 of normal inventory in the Las Vegas resale single family home market. So we're still chewing through inventory. Well, what happens in normal seasonal pattern? We see buyers coming back in from January forward. We see sellers coming back in, and so we get this big surge. It's usually referred to as a spring selling season, but in reality, it starts in January and it just grows throughout the entire first half of the year. Well, we're seeing sales picking up, which means demand is picking up. We're seeing prices going up, even with high interest rates. which means the demand is picking up, or you don't get increased sales with increased prices unless demand is picking up. And so demand is picking up clearly, seasonally appropriately, even though we've got the restraints of these high interest rates. Supply, that is not picking up. That's a big problem. In fact, it's going down. Well, what about newly listed resale single family homes in the Las Vegas market? Maybe this is good news. 2,353 single family resale homes were listed for resale in the Las Vegas Valley. And this is up. It's up one listing from what we saw in January 2,352. It is up 0.0%. It is totally flat. So where are these new listings coming from? We've got new listings coming into the market at a really depressed rate. In fact, if we look year over year, while we are up 44.2% from the 1,632 newly listed resale properties that we saw in February of 2023, remember what was happening in 2023. We were pulling out inventory all year of 2023 because we had sort of peaked on inventory at almost normal in October and September, depending on which segment of the market, of 2022. And so we were still working down inventory. We were getting these high interest rates that were locking in sellers who were deciding to pull out of the market pretty quickly. And so if we exclude 2023 from the overall historical analysis, only Decembers have been lower since April of 2008 in terms of newly listed houses coming into the market. And of course, April of 2008, we were right in the middle of the great financial crisis, which was disrupting all of the housing numbers here in the Las Vegas Valley, in fact, across the entire country. Total inventory, with the exception of 2 months from early 2022, we're at the lowest overall housing inventory since August of 2007. We're sitting at incredibly low inventory here in the market, and that low inventory impacts buyers who are looking. One, they may not find the house that they want, or two, they may have to compete with each other about the very limited inventory that's out there. And what happens when buyers are competing with each other? Prices go up. So we've got demand materializing, coming back into this market at seasonally appropriate levels. We've got supply going down. Sellers are not returning to this market yet. Will they? Sure, at some point in time they will. When will that be? We'll see when interest rates start to come down kind of significantly. Right now, the sellers in this market are largely I have to sell type of sellers as opposed to I want to sell type of sellers. In fact, I'm going to suggest to you, even on the buy side, the demand side, most of the buyers in the market right now are I need to buy as opposed to I want to buy. It happens, interestingly, there are more need to buy buyers than there are need to sell sellers. And that means we're going to continue to see inventory not going up, not matching what's happening on the demand side for at least the next couple of months. It's traditional. We see lots of inventory build, lots of newly listed in the winter and spring. That has absolutely not happened here yet in the Las Vegas Valley in 2024. In fact, let me point out one more thing here. Across the statistics, sold 1,662, pending 1,992. So we've got 330 more pendings were signed in February than we had closings in February. That suggests March demand numbers are going to be going higher still than what we're seeing for closed sales in February. So that's great. That's a forward-looking determination based on the measures that we saw the month before. And our inventory is looking like, because new listings have actually remained totally flat while inventory is falling, it looks like inventory will fall further in the month of March. So March, at least, we're setting up for, again, further increases in price appreciation. We're setting up for further increases in demand measures, and we're looking at further decreases in supply measures. One other statistic for you, back on market. I've been looking at this number since we came out of the pandemic lockdown in mid-2020. This number continues to remain very elevated. 671 pending contracts failed in February of 2024. That's 28.8% of all the contracts written. So we're still sitting in this almost 30% kind of range. We've been fluctuating between something more than 25% to just about 33% back on market now for, what is that? A half of 2020, all of 2021, all of 2022, all of 2023, and the first, let's just call it half of 2024. We've been sitting in this incredibly high back on market failed contract environment for 4 years now. So if you're thinking about buying a property, if you're thinking about selling a property, make sure you're talking to your real estate agent. Please call us, talk to us. I'd love to be able to sit down and talk with you about this and other issues and see if we can actually help you with your transaction. But when you're talking to other real estate agents as well, talk to them specifically, not just what's the value of your house and how long is it going to take to sell your house, or how far will my budget go if this is what my budget is and I want to buy something. Talk to them specifically and explicitly about these back on market statistics and what they know about them and how they're going to help you deal with these back on market statistics. A back on market is literally, it's deadly to a transaction. It means a transaction fell apart, that transaction died. And if you're a buyer, you don't want that to happen to you. If you're a seller, you don't want that to happen to you. You need to make sure that any real estate agent you're talking to, whether they're a relative or a friend or me or anyone else that you may find that you want to talk to them about back on market. It's actually the more interesting issue right now than is the general, how's the market doing? Are prices going up? Are prices going down? But as we've seen here, prices going up strongly, sales and pending going up significantly, seasonally appropriately, even though they remain at low levels, and supply is just remaining incredibly constrained, still further constrained than what we had seen before. Again, we've only seen 2 individual months in the time period all the way from 2007 to now that had lower inventory in this market. So a very, very significant feature of this market, continued low inventory. That's going to continue for a while. Okay, I am Justin Miller. I'm co-founder and principal of the Chong Miller Group. And at the Chong Miller Group, we help people buy and sell homes. We help people make money through real estate or build wealth through real estate. Please reach out. I'd love to hear from you. Let me know what you think about these videos, and please feel free to share these videos with your friends, your neighbors, your colleagues, your family members, anyone who you think could benefit by having the actual analytically examined data and knowledge about what's taking place in this market. It's an interesting market. It's a strong market on the pricing side, on the demand side. It is a very weak market on the supply side. I will see you in the next video. Thank you.